Greetings. Welcome to my weekend market recap, 16 September 2023. I am Sagar Nandi, retired IT professional swing trading stocks in the USA as well as India markets using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis, always before knowing the results, on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. I like to share higher probability trades, and I believe they are higher probability because I combine forces from multiple dimensions, that is technical dimension with market directional preference, sector industry rotation, fundamental strength, as well as seasonality sometimes. Because I try to align all these forces, the trades tend to work out a little bit better than using just technical analysis. That is my experience. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if it is suitable for you. I use the Q systems and only the Q systems to make trading decisions. Q has multiple components. The technical analysis component runs on TradeStation as well as Metastock, and all the other components, that is sector industry rotation analysis, fundamental analysis, peer analysis, seasonality analysis, and technical breadth analysis, they work on only Metastock. The systems can be used for the USA market as well as global markets. That was the last slide. Let's continue with the live systems. First, look at dollar index. As usual, using the weekly, daily at a glance template, dollar index is going up at about a 45-degree angle. That is very sustainable uptrend. Color in the weekly backdrop is bullish for many weeks. Daily is going up, has only trend line support, no trend line resistance. There is no signal that it is going to drop anytime soon, and even if it tries to drop, it is not going to be easy to break all these trend line supports in one go. So it is not going to drop, unlikely I think, suddenly. And if that is so, the market may not be going up straight. If dollar is strong, that has an impact on the USA market as global markets also, but certainly on the USA market. Strong dollar is not necessarily good for stock market. But we'll not make a decision on the stock market based on looking at dollar. We'll make the decision based on the market itself. That is my approach. I know some other people like to do intra-market analysis. I don't do that. If the market is bullish, I'll know it from the market charts and from other market breadth insights. I don't need to look at another market, whether it is dollar or oil, to decide if stock market is bullish or not. That is my approach. So dollar is bullish. Let's quickly look at a few of the global markets. Australian market, all ordinaries. And though I'm looking at global markets, as you know, the technique is same, whether we are using it in non-USA markets or USA market. All ordinaries is inside a range created by trendline resistance and support. Inside a range in the weekly also. In the daily, it is at the upper edge of the range. If anything, I would like to short if all ordinaries goes down next week. I don't like to trade the indexes Usually I don't prefer that. I have Q index using which I can drill down to the constituent stocks in real time, find out the weaker fundamental stocks and see if they are going to give a valid technical short setup if and when all ordinaries reverses from these trend line resistances, and then I like to short those stocks. That way I can align more and more forces in favor of my trade. I'll not like to buy now. I like to short if all ordinaries reverses. That is the usual Q approach, that is short at the upper edge of a sideways range, try to buy at the lower edge of a sideways range. Now it is at the upper edge. What about Japan's Topix index? This is very bullish. In the weekly, the backdrop color is bullish for 3 weeks in a row. In the daily, it is bullish with higher high, higher low, but it is also above the upper boundary. So it is bullish but too overbought for me to buy now. Incidentally, you see how the analysis is applicable to stocks as well as indexes. Notice topics at this point. It went up after creating a swing low. It went up in daily while the weekly backdrop color was already bullish. It went up with a bullish flow with a possible flow setup as well. But I would not buy at this point. Yes, you can also see it broke above the watermark resistance, but I would not buy because I follow the Q guidelines that is saying that not to buy when price is already above upper boundary. There is one exception, as you know, when it changes from downtrend to uptrend, but that is not the case here. It is already in uptrend for a long time. So if it is above upper boundary, that's the time I would not like to buy. Why I came to this discussion is that we have to apply the Q approach as a whole. We cannot pick and choose. We can say, oh, this is looking very strong, so I'm going to ignore the rule of buying or not buying depending on where the stock is at upper boundary. It's already at above upper boundary. That was not the time to apply the flow setup. I will later on come to a stock in the Indian market where I came to know one of the Q traders in India actually bought a stock when it was breaking out. There is no harm buying the stock like that, but it is not a Q approach. And therein lies the fact that though several people have the Q systems, they don't necessarily follow the Q techniques. Systems are only as good as the techniques that are to be used with the systems. And I in fact shorted the stock after he bought it. I'll come to that stock. So keep that in mind. Systems are only as good as the techniques, the techniques with which they are to be used. So I'll not buy, but it is uptrending. So no question of shorting as well. China market, CSI 300 index. In the weekly, it is inside a range. In the daily, it is going down. If it can come to this trend line support in daily, by which time it will come to the trend line support in weekly, and then reverses from there, I could look to buy, but probably not in this case, because I see that even if price tries to go up from the trend line support, it will be too close to this trend line resistance by that time, and also after that there will be another trend line resistance. So I will not be able to buy at the lower edge of a range because the upper edge will be too close. So I look for it to break out of the resistances that are too close to current price before looking to buy. And I'll not like to short now. If you look back, The shorting opportunity was here. That was a proper flow short setup. That was the day to short China market. Not now, not if price comes to the trend line support, not even if it breaks the trend line support, because by that time the stop will be very far away. Again, that is the Q approach. Not to take too much risk. If stop is too far away, I am not going to short it. The short point was here. The more you use the Q systems and techniques, the more confidence you grow to short at the optimal point. And after that, every day that passes by, the risk increases and reward reduces. That is not my approach. That is not Q guidelines as well. Let's look at FTSE index first, then I'll come back to India market because I want to discuss a few stocks in the Indian market. UK market FTSE index. I was on mute for a while. Sorry about that. Let me start again. For FTSE in the weekly has broken out of trendline resistance. However, in daily it is inside a range and it is at the upper edge of the range with an indecisive shape candle on Friday. That is not when I would like to buy. Instead here, if price comes down next week, I'll be happy to short. That will also mean that weekly is creating a false upside breakout. Those tend to be more lucrative short points. So it is in a range and I am looking to short it if price goes down next week. I not like to buy. Even if price goes up next week, I am not going to buy because the stop will be very far away. The recent swing low is very far away. Yes, Sujay, I noticed that I was on mute. I am on unmute now. Thanks for noticing that. Now let's look at India's Nifty 50 index. Nifty 50 is bullish in the weekly chart. In the daily chart, it is going up. It is bullish, but once again, it is above the upper boundary. If we look back, the last buy point would be here. That would be a buy point using the pullback long setup, not a flow long setup because there was no flow signal on the ribbon, but that would be a pullback long setup. Again, you could buy individual fundamentally strong stocks at that point. Now it is bullish but too overbought for me to buy, and you can see it is overbought for too many days. In fact, if it reverses now, goes down below the watermark resistance, that will be a very lucrative short point. Now let's look at a stock. BHEL, well, a well-known manufacturing company. And we will see how the Q signals come of great use. Let's look back and see it is in an uptrend, still in an uptrend. We had the last trend following long setup here, where we had the ribbon signal for trend following long setup. Price was below upper boundary. We could buy there, put stop just below recent low. The stop would be very narrow and we had a large profit in the trade. Now, after it went up, it created an indecisive candle at the top, tried to break above the high of that candle, and immediately reversed, creating a false upside breakout. And on top of that, it had a bearish headwind signal, a very unique signal that sometimes gives us the reversal point at the very top. And I remember in the Indian traders group, I mentioned we have a WhatsApp group for the few Indian traders that I shorted well, and what would be the preferred instrument. It could be verticals, which is actually preferred in the USA market, but in India market the options trading is not so simple as is in the USA market. Trading verticals is even more complex. We have to enter the legs individually, monitor them individually, manage them individually, exit them individually. Cannot trade them as a pair. So I didn't trade it as a vertical. I simply bought naked put. And as I always mention, these are very lucrative entry points. When I am shorting what point? Shorting at jump thrust high, at price extreme high with a reversal signal. Those are very lucrative short points. So I remember I mentioned it the day I entered it, and one trader mentioned that what was a bit surprised probably that I was relying so much on the headwind signal, and that was okay for me because the risk was narrow and I have seen the headwind works out quite well as a lucrative trade when it is so overbought. Very next day it dropped sharply. My options had more than 100% profit, and my thumb rule is if a naked options trade gives 50% profit on entry day or even 30% profit on entry day, 50% in 2 to 3 days, 100% profit in 1 week, book profit, and I did book profit in that trade. Now if it gives me another proper short setup, that will be probably a trend following short setup which you don't have now. So I shorted this at the very top looking at the extreme overbought condition, and you can see the day I booked profit, that day also had big move 3 down, extreme bearish momentum. As I have always shared publicly that this often points to further down move ahead. So I am going to look for further short entry point, not buy point, but I'll wait for proper signal, proper setup. Once again, this is a stock I shorted at the very top, and recently I shared several trades in the USA market also where I shorted at the very top. I am very good at doing that because Q Systems has several reversal trade setups. I am also equally good at buying trend following trades or shorting trend following trades because Q has setups for that as well. Now let's go to another stock. By the way, even this stock, if you see, on this day, it had a flow signal, it had a possible flow setup. I think the backdrop was bullish at that time, and it broke above the watermark resistance. That was a bullish day to most people, but Q guideline says not to buy. This is what I explained on the, I think it was the Japanese index, isn't it? Let's go back. .topx. Yes, on Japanese index topics, I explained that why this day is not a buy day for Q setup. That for the same reason for VAL in India, and it's a stock, not an index, this was not a buy day, but it was a short day instead. And let's look at another trade that I took, or one could take on this Friday. That was NMDC. At least one wouldn't buy. Let me explain. If you look on this candle, this is looking exactly same as the Topix index some days ago and also VEL some days ago. It is very strongly uptrending in daily, weekly both. We had a flow signal, we had a flow setup, we had a breakout above watermark resistance. However, it is well above upper boundary. I'm certainly not going to buy it. Now, if you remember VEL, there are other similarities. We have jump thrust high, price extreme high, and in this case, unlike VEL, we already had big move down 3. So when it broke above the watermark resistance here with bullish flow, I was not buying, but I know one of the Q Indian traders bought the stock on that day. Again, that shows that Q systems are available to a few people, several people in India, several people in USA, maybe in Europe, but they don't always follow the Q techniques. Using Q techniques, I am now looking to short. In fact, I did short it on Friday using naked put again. Why I shorted it is because intraday basis it had a bearish headwind signal. Yes, the signal has gone away, but I am using intraday charts to enter the trade. I am holding the long put with a small profit, and this trade also I publicly shared on the WhatsApp group just after I entered it, well before knowing the results. I'll see how it plays out. It's not my aim to show every trade is making profit, though my percentage success rate is quite good, but that is not the aim. Aim is to show a disciplined approach and explain why I am doing what I am doing. So I have a short position in NMDC, and that was taken based on the bearish headwind that came. It was there just before the close also, but then it went away. We'll see how it goes. But in any case, the risk is narrow for me, so I'm okay to take a trade like that when jump thrust is high, price extreme is high, and we already had big move down 3. I am expecting the stock to come down sooner than later to give me some profit. Well, that was a look at global markets and explanation of the Q techniques that are to be used with Q systems. One cannot have Q systems and then apply own techniques and then say I'm using Q. I think that will not be fair to the Q systems, but it is perfectly okay to do that, of course. It's no harm people doing that. I'm just explaining that that is not Q techniques to buy a stock on this day. Okay, now let's look at the USA market, and we might even look at some of the tweets. Do I have time for that? I'm thinking maybe not. Let me focus on the live systems, and you may always go back to the Twitter handle and look at some of the stocks. I recently shorted Netflix. I recently shorted Amazon, booked profit in all of them, and I shared the ideas on Twitter or X before knowing the results. You may see how I analyzed them. I will not spend time on that. They are already available on Twitter. Let's look at the USA market now. And for USA market details, I'm going to use Q Elite on TradeStation. This is SPY. Let's look back. When we were here, I had a bullish view. That worked very well. When we were here, I had a bearish view. That was also working well. Last week, I had a neutral view. And if you look at the weekly chart, that worked well. Price didn't move much. So for last 3 weeks, my view worked well. This week, yes, the weekly chart, we can see price came down little bit, but it is just above trend line support in weekly, daily both. In daily, it is inside a triangle pattern. So I am continuing with the view of the previous week. That is, I have a neutral view, at least based on SPY. However, and there comes the application of all aspects of Q systems. However, we have a big move down 3. The last big move was also big move down 3. Prior to that, it was at jump thrust high, price extreme high. So remember, whenever we have jump thrust high, price extreme high, then big move down 3, I'm expecting price to come down further. And this is not what something I'm showing now. When this big move down 3 came, I explained that in the live market recap. So price came down after that. Tried to recover but created a lower high and came down, created another lower high, came down, but it is inside a triangle. But why I came to the big move down 3 on Friday is because I'm slightly more bearish than bullish looking at this big move down. Yes, it is inside a range, but I am giving slightly more weightage to the bearish side because of the big move down on Friday. Let's look at the other market ETFs, and deciding the market's preferred trading direction is most important. More than 50% weightage goes to that. QQQ also inside a range. We don't have big move down 3 here on Friday. So here I have a neutral view, the same view as I had in the previous week. Once again, when we had jump thrust high, price extreme high, came big move down 3, I very clearly mentioned in that market recap I'm expecting price to come down. It came down after that, enough to give us several profitable swing trades. Now I have a neutral view. Dia has support, many of them in daily from trend lines and as well as in weekly. So I'm having a neutral view of the market from Dia also. And lastly, IWM inside a range, weekly broke below the trend line support but indecisive shape candle. So I'm having a neutral view. So overall I have to say, though looking at SPY's big move down 3, I was slightly more bearish than neutral. But after looking at all the market ETFs, I see big move down 3 came only in SPY. So I am not overall putting that much weightage now on big move down 3. Looking at the external view, that is using the ETFs, my market view is neutral. Let's now look at the market breadth total view, a unique single chart internal health check for the USA market. And here I have some signal that is more bearish than bullish, and that is the Hindenburg confirmation signal firing for 2 days in a row. Remember, looking back, when the Bangos came, that was irrational exuberance, then came Hindenburg alert, then came Hindenburg confirmation. I was bearish all this way. And now the signals had fired for 2 days in a row. And after that, we have a significant distribution count on Friday. So looking at the market breadth total view, I am seeing something that the external view was not showing. The Hindenburg and the distribution count, that is now making me having a slightly bearish view. External view neutral, internal view bearish. I am not opening the drill down of the total view by looking at NYSE, New York Stock Exchange, and Nasdaq. If I did that, you would know that these Hindenburgs came from NYSE, on which they were originally designed. Whereas here I think they came from Nasdaq. So in any case, I am having a bearish view looking at the Hindenburgs and the distribution count. Let's do some more market level analysis. Let's look at QAJ sector industry stock advanced decline breadth, longer term view, monthly view, 10 days view, bearish. Just looking at the colors. Weekly view, 5 days view is mixed. maybe slightly more bullish, not much. And from the weekly view, if we go to 2 days view and then 1 day view, it turned bearish. So longer term is bearish. In the middle, it strengthened a bit and then weakened again. Looks like in a downtrend, it tried to rally and then declined again. That would be the most optimal point to short. If you imagine the equivalent breadth chart, that would look like something going down, tried to recover and came down again, and we are just at this point, not down so much, just starting to come down. We are at this point. That is how you may interpret this sector industry stock breadth plot, that it is in an overall downtrend, tried to strengthen a bit and then declined again. Friday is the first day after little bit of strengthening that it declined, so that would be catching the swing high. So this is telling me that I am going to favor bearish trend. If I look at the bucket analysis, 61% of stocks in QH are below the mid Bollinger Band, that is bearish. It is not oversold because percentage of stocks in the lowest bucket is at only 3.4%, nowhere near 30-40%. So it's bearish but not oversold. That's the time to short, and sector industry breadth is also trailing that. So far I looked at the external view, then the internal health check, and then sector industry breadth view. That is telling me to be slightly more bearish. Okay, let's look at the last aspect of the market, that is using technical breadth from Q Finder. Weekly view, mixed overall. And daily view, Friday's view is bearish. So again, that is showing that I am allowed to be slightly more bearish than bullish. I'd like to actually go back to the market breadth chart. I forgot to see one thing. I'm doing it live. What kind of stocks are in favor? If I look at growth versus value, growth was outperforming, but now it is trying to roll over with lower high, lower low. That is clear. It is now having lower high, lower low. So growth is not favored. I would like to short, as I mentioned, looking at the multiple dimensions, external view, internal health check, sector industry stock breadth, technical breadth. I have a slightly bearish view, and now I came back to this to see what kind of stocks I should be bearish on, and that answer is that growth. Try to short growth. And small cap versus large cap, small cap is coming down, so we could short small cap growth. If we trade small cap, mid cap, large cap, everything, we could short growth, and if I get small cap growth, it is even better to short. Well, if I did that, why don't I look at FFTY, the IBD 50 ETF that tends to show how small cap growth, maybe mid cap growth, or let's say small cap growth moves. FFTY, IBD style stocks are not working well, at least the ones that are in FFTY, hugely underperforming mega caps. And interestingly, right after the bullish headwind came, it rallied quite a lot. So once again, the headwind signal caught the very low. Tried to recover, stopped right at the yellow direction line. Now it is coming down. So that is also telling me that it is okay to favor shorting growth stocks. Of course, FFTY is a very narrow view. I would rather use the internal health check growth versus value plot that is telling me to short growth. I just came here to show that IBD style FFTY stocks are also not doing well. If anything, that is favoring shorting growth stocks. If that is the conclusion, now I have some more time. I may look at some of the stocks. Now, interestingly, I'm also going to share some buying candidates. Why not? I look at that ST, and I would like to carry out a complete 360 degrees analysis using Q systems. So ST is one stock. Let's get its fundamental scorecard, and you will see how I am aligning the forces from different dimensions. Retrieving data about the 65 peers now updated. Let's wait for a second for the plot to come up. Now Friday was a bearish day, so 78% of peer stocks are weak. However, in itself, if I look at this stock's fundamental scorecard, the stock is making money, EPS is positive, pays a small dividend yield. Dividend is not good enough to buy for that only. I'm not going to buy based on dividend, but the company is profitable, it is undervalued, and it has earnings growth. Not high earnings growth, but it has earnings growth, undervalued. That allows me to buy. What about the relative strength of the industry? I will like to have the relative strength to be strong or accelerating. Yes, in itself, the peers are more down than up. That is fine. Friday was a bearish day in the market. Let's look at the industry score. And industry score is not strong, but I see that 2 days is having very high acceleration. That allows me to buy. So what kind of industry it is? An industry that was weakening, and now I am seeing it is starting to accelerate from a low point. So if we think about the plot for the industry itself, that is electrical components and equipment, it will be like something that was coming down for a long time, now just starting to accelerate upwards. Not strong yet, has not gone up all the way yet. That's why the score is not bullish, but it is showing some acceleration at a down point. So how will the stock chart look like? Usually stocks tend to follow the industry. That's why I put very high level of importance to the industry scorecard. Let's look at the stock chart now. ST. It's actually the same plot that I imagined for the industry. A stock that came down a lot, stopped right at the longer term weekly watermark support, displayed bullish headwind at the very bottom. So far, that bullish headwind's low is not breached, that is, this watermark is also not breached. We have a bull release signal this week, and in daily I have a bullish breakout with bullish flow and a bullish flow setup also in daily. Weekly is not in bullish color, but this is a flow signal, this is a possible setup also in terms of daily chart. And this is a very special case of the flow setup where it tries to anticipate that it is going to be in an uptrend soon. Very unique flow signal, has some complexity. It can catch the uptrending points, but it can also anticipate when it is, in some special cases, it can anticipate that it's going to move into higher high, higher low. We already have higher low. It will have higher high if it can break above this previous high. It is trying to anticipate that. That's why this is a very special case of the flow signal firing, sorry, flow setup firing on the daily chart even when it is downtrending. Well, all that is good. It has multiple possible setups in daily. Weekly is at a support. And let's look at the chart using Q Global as well, because I want to show the commentary. ST. Well, I'm not going to wait for the Metastock's response. Let's move on to the next stock. Another buy candidate. And you see, the point is that whatever be the market condition, we can find buy setups, we can find short setups. I'll show some short setups. Which one do I actually trade? I like to trade in the direction of the market unless I have a reason to believe that some stocks are going to buck the market trend. Is ST such a candidate? Not really. It is not a defensive industry. What was the industry? Let's go back. It was electrical components and equipment. Yes, it has a very low risk entry point. So if I was bullish on the stock, for longer term holding, it is at a perfect buy point in my view. And one way to trade in that case is to use short put or short put vertical for longer term holding. For shorter term holding, I would like to buy stocks in a bullish market view, short stocks in a bearish market view. In a bearish market view, I can buy stocks provided I think they are going to buck the market trend. But electrical component equipment industry is not good for that. That's what brings me to the next stock. But before that, Metastock has opened ST. So let's look at the commentary. That will read the chart exactly as I would read and see the value of the commentary. As of Friday's close, we have a breakout long setup as well as a flow long setup in daily, and we have two very useful patterns, attractive patterns. Bullish squeeze move. This is something you would not know unless you used Q Finder or the commentary. Q Finder would also show these patterns. It has two attractive patterns, price extreme low as well as squeeze move, moving out of squeeze. That is a very powerful move from a narrow price range, and that is what attracted me to the stock, not just the setup but the patterns. That's why I thought that it may be a longer term buy candidate. Very powerful move from a low price point. Well, let's move to the other buying candidate which I favor slightly more actually, that is USFD, and the reason is it is in an industry that may buck the bearish view of the market. USFD, because it is a defensive industry unlike ST. While it is retrieving data about peers, let's look up the industry scorecard from QEdge. Beautiful. One glance shows that it is one of the strongest industries, top 20%. We know that from the checkered background. And though the market was bearish on Friday, this industry was up sizably, 0.88%, almost 0.9% up move at the industry level. That is very bullish on a bearish market, and that is why I came to this second stock, because this is in an industry that is defensive. Food distributors, we all need to eat, that may buck the trend. Defensive stocks tend to do better in a bearish market. So the industry is telling me it's perfectly all right to buy. And let's look at the stocks scorecard. The stock, that is US Food Holdings, food distributor industry, USFD is the ticker. The company makes money, medium valuation, has earnings growth. This is what attracted me also. Funds are accumulating, insiders are also buying. That is good enough reason to buy in terms of fundamentals and industry score. Let's look at the stock. I'm going to use Q Global so that if required I can look up the commentary. USFD. It has a breakout setup It has bullish flow and very nice. It has big move up 3. Extreme bullish momentum on a bearish day in the market. Very high volume breakout with big move up 3. Weekly has neutral color, bull release signal and a bullish reversal. Good enough reason to buy. Let's look at the commentary. Breakout setup in USFD on Friday, and it has one useful pattern, that is bullish fan out pattern. You could scroll down to see the other signals. We have good enough reasons to buy a stock in this market, and between ST and USFD, why I explained ST is more to contrast it with USFD in terms of industry. USFD is in a defensive industry. If my market view is slightly bearish than bullish, I would like to buy, if at all buy, I would like to buy in a defensive industry. USFD is the right candidate for that. Was it paying any significant dividend? No. So it was not a reason, dividend was not a reason to buy, but technical fundamental score and industry strength, those are reasons to buy USFD. Now let's look at the bearish candidates. And what kind of stock was I going to short? Growth stocks. That was my conclusion. Let's look at Micron, MU. Many Q signals and setups are coming together. Weekly stopped magically, mysteriously, right at the weekly trendline resistance. Daily stopped right at the watermark resistance, where a cluster, remember, one indecision signal is important, cluster is even more valuable. So cluster of indecisions came, and then came on Friday bearish headwind near the high of this swing up move with a bear release signal that is at the band also, and it tried to go above the trendline resistance in daily and reversed, closing below the trendline resistance, creating a false upside breakout. Those are good enough reasons to short Micron technically. Let's look at the commentary, if I may. Either you can use commentary or you could use Q Finder to see if we missed something. Let's look at it. I'm doing it live. I looked at the chart, but I didn't look at the commentary before. Micron as of Friday's close, see now the value of commentary. It is giving a possible headwind reversal short setup, also a box sideways short setup, which I missed when I looked at the chart. That was also okay to trade based on just one setup, but we have two possible setups, and we have two reasons from pattern to short it even more. Price extreme high and bearish indecision cluster. And as I mentioned, you could read those from the chart as you are getting more experienced over time, or you could use the commentary, or you could use the finder. Let's put Micron in finder. Let's look up the finder on Q Global. It has a fan out. Oh, sorry, this is USFT. Sorry, it's not Micron. Okay, let's get Micron scorecard. We will also need to check out its industry score. We looked at the technicals. Technicals are good enough to short. Let's look at the industry score. We want a 360 degrees short setup where all forces are aligned. My market view is bearish. I prefer to short growth stocks. Semiconductors is a growth industry. Instantly I see it is among the bottom 20% of industries. That's an industry I like to short. It was down very much on Friday, more than 2% down at industry level. This is exactly what I want to short, growth industries, and let it get the scorecard. While it is getting the scorecard, Let me put it on Finder. Let's put it on Finder Plus Micron. I mentioned the patterns you could read from commentary, setups you could read from commentary, or you could use Finder. So it is Finder on QLE TradeStation now, and you can see it has price extreme high pattern, indecision cluster pattern, and it has possible headwind, box and bounce setup, possible 3 setups. It has some other bearish momentum. Everything is red except price extreme high, which is actually a lucrative short point. And if I wanted to look it up using Q Finder on Metastock, we'll see the same thing. That is, it is at price extreme high with indecision cluster, box and headwind signal. Bounce is not there, that is fine. Sometimes the trend lines are drawn little bit differently on TradeStation and Metastock because of the underlying differences in the platforms. That's why Metastock did not fire the bounce setup, but it did fire the other two setups, and the patterns are the same. Let's look at its fundamental scorecard. Very high negative growth and decelerating negative growth. We can see that clearly from the graph as well. Decelerating revenue growth also. High growth stock with growth coming down. Perfect to short. Funds are not buying. Micron is a short. Another stock that is a possible short candidate is also in semiconductor industry, AMD, Advanced Micro Devices. Beautiful, isn't it? One look at the chart and we see it has a breakdown in weekly as well as daily. Yes, the stop loss is a bit far away to my liking. So if I'm shorting it at the close on Friday, I'd like to use verticals. I would not like to use the stock to short it. That is how Q guidelines also tells us what instrument is preferred. AMD has liquid options, so I could use long put verticals, maybe 45 days to expiry, to trade it at the close on Friday. Now, if I look at this stock and Micron, which one would I prefer? I could short both of them at the close on Friday. Now, let's look at AMD's 360 degrees analysis. Get the fundamental scorecard. Same semiconductors industry, so the industry score will be same. We can again look it up. Yes, same. Very bearish, one of the bottom 20% industries. Industry allows me to short. The fundamental scorecard, very poor. Overvalued stock, poor earnings quality. This is AMD with negative earnings growth. Funds are not buying. That's a clear stock in terms of fundamentals, technical, industry strength, market view to short. That is how I find trades using live systems, real time data during market hours, or you could do that after the market hours if you are busy during market hours. Both are possible, but everything is 100% real time. And I showed once again using live systems how in all markets we can look for buy candidates and short candidates. My market view is slightly more bearish than bullish, not very bearish because the market ETFs are all moving sideways. None of them are in clear downtrend. It's not very bearish, but slightly more bearish, bearish more on growth stocks. And I found two semiconductor stocks to short. I found one USFT, that is a defensive stock to buy. I'm at 1 hour point. Let me end today's session here. You may look at my Twitter post to see how the recent trades did. I think they did quite well, but you may check that out yourself. Thanks a lot for joining. I look forward to seeing you in my next session, most likely next weekend. Have a great weekend, and as these live examples on YouTube and Twitter or X show, as I always say, there is no reason not to do that. Trade profitably. Thank you.